Hey guys, I know I'm a little bit late. I was supposed to upload this video yesterday. I'm recording it earlier, but I think that because I have some stuff going on outside of YouTube, I think this video is going to get uploaded on election day, which is kind of crazy. So by the time you're watching this, we're seeing an election unfold, and who knows how this is going to turn out. Hopefully we get results in a timely fashion, but this may get dragged on a bit. Either way though, either Trump or Biden is likely to win. And in the last video, we talked about 5 companies and their stocks that I think can benefit from a Biden administration. But today, we're going to be talking about 5 companies and their stocks that I think can benefit from a Trump victory, a Trump administration over the next 4 years and into the long term based on different policies and things like that. So, should be a fun video. Please do not hit the dislike button just because you hate either candidate. That tells YouTube that you really just hate me and you hate my channel, and then the algorithm hurts it. So if you like me, you like my unbiased videos and my bipartisan videos and the channel, please hit the like button because that tells YouTube that you like me, you like the channel, and it helps me. And I want to say thank you for that support. But with that said, it should be a fun video. We got a lot to cover here, so let's just dive straight into this. Okay, now obviously a Trump administration would try to get many different things done over the next 4 years, but I just want to kind of quickly highlight some focuses here that we'll be talking about as we go through different stocks. Now, obviously, Trump cares a lot about having low taxes. He has a strong focus on military. We've seen that in the past. He has a strong focus on economic growth. We know that he really feels like the economy and even the stock market is a big reflection on how he's performing as a president. So he does care a lot about that. Obviously, he is very passionate about opening up the economy and keeping it open during this global health crisis. He has a big focus on getting V shots for the pepperoni out to the public so that we can kind of keep the economy open. So those are just kind of a few things that I just wanted to quickly highlight. There's other stuff too, but we'll just kind of run through them as we list off the different stocks that we'll be focusing on in today's video. So let's go ahead and run through them. Okay, now in no particular order, let's count down from 5 to 1 and kick things off here with a social media play. Because look, it's no secret that a Trump victory will likely result in tons of social media use, as we've seen over the past 4 years. Those that hate him love to be very vocal about it, and those that love him obviously try to defend him. So all of this leads to huge engagement online as more people kind of argue back and forth, with social media platforms loving every second of it as they really rake in billions of dollars from ad rates going up. In fact, over the next 4 years, PwC research estimates that US internet advertising will more than double the size of TV and completely eclipse virtually all other forms of advertising as well. And I think a Trump presidency would only help this trend continue. Keep in mind that as of last year, social media already made up the second largest portion of that, only behind search, but over time it's expected to surpass even that, at least according to Statista. Needless to say, owning almost any of the major social media companies over the long term will probably prove to be a decent investment, but in my opinion, the best pure play on that market right now and at today's prices is probably Facebook, ticker symbol FB. And even though I do like Google more as a kind of complete package, I just think that Facebook is the more kind of pure play social media stock out there with the most attractive valuation at the moment. Granted, the stock has already climbed a lot over the years and is even up close to 30% this year as well, despite advertising taking some big hits from the global health crisis, crushing our economy. But when you compare Facebook to others, it actually still seems like a reasonable long-term pickup. Last year, Facebook's biggest competitors in the digital ad market were companies like Google, Amazon, and Microsoft, without Twitter or Snapchat even really making the top of the list. But when we look at valuations, Facebook has by far the lowest PE ratio, with even Twitter sitting at nearly 70. And if we look further out into the future, Facebook is also the only one on the list with a 5-year PEG ratio of less than 1, which is generally considered a great long-term value. That's because Facebook's platforms and services across Facebook, Instagram, WhatsApp, and Messenger continue to rake in gigantic sales and profits. Last year alone, they did over 70 billion in sales. That's pretty crazy. And their large profitability has helped them build up one of the absolute best balance sheets I've ever seen, with a current and total ratio of both over 5. That'll help them continue investing in future growth, where they've already been doing a phenomenal job, especially with Instagram, where their unique format of unintrusive advertising, where you can just really kind of swipe away ads or click on them if they happen to catch your eye, that's led to a massive 84% of users being willing to discover new brands or products, while 92% say that they've already followed a brand, clicked on their website, or made a purchase after seeing the product or service on the platform. That's pretty crazy. That's very high engagement there for advertisers. Anyway, add to that the low corporate tax rates from a Trump administration, coupled with continued social media engagement that will only get larger in the future, and I think Facebook will perform solidly well. Speaking of lower taxes though, for stock number 4, we're going to travel into the banking sector, which tends to be very sensitive to those rates. These are companies that don't typically experience a lot of sales growth, but instead rely very heavily on how profitably they can run their business and return money to shareholders, especially through dividends. In fact, up until this year, the top 6 largest banks in America were able to save over $30 billion thanks to the Trump tax cuts throughout his term in office, which allowed them to continue growing their dividends at some very attractive rates. But according to Morgan Stanley, Biden's 7-point corporate tax raise would send big banks' earnings per share falling by a median of over 7% next year. And that, coupled with the global health crisis destroying our economy and leading to rock bottom interest rates, has sent banking stocks crashing this year. For example, the Spider S&P Bank ETF is down about 30% so far this year. But if Trump is able to turn the economy around and keep the low tax rates that are helping banks with their profitability, there could actually be some opportunity here. And I don't claim to be an expert on bank stocks. I really try to limit my investments in them. But my personal favorite has always been JP Morgan Chase, ticker symbol JPM, which is our pick for stock number 4 on the list, since they're the largest in the US with close to $3 trillion in assets. And in my opinion, they are also the best run of the group as well, as they typically generate higher sales, higher profits, and even higher and more stable growth than many of their competitors, all of which led to them generating the highest amount in savings from the tax cuts in each of the past 2 years, according to Bloomberg. Of course, the next few years are going to be extremely difficult for banks, especially if the economy does not recover, and that's why the stock is currently trading down about 30% this year, as investors fear that their dividend may need to be cut, which currently yields a very nice 3.7%. But as it stands, their payout ratio still looks manageable to me, and if Trump wins and is able to turn the economy around, JPM could be a great long-term dividend stock to own. And it's looking like analysts might be having similar thoughts, as all 6 of the past 6 ratings were either reiterations or upgrades to buy and outperform, with an average price target that is about 20% higher than where the stock is trading today. Okay, now moving on to stock number 3, I think it's no secret that Trump adores the military and will not hesitate to plow money into it at all times. And one company that I think could be a big beneficiary from another 4 years of Trump is Lockheed Martin, ticker symbol LMT. And this is one of the world's largest aerospace and defense companies, with huge businesses in military aircraft, cybersecurity, missile defense, and even space exploration and defense, which we know Trump is also heavily interested in, as he just recently created a new branch of the military called Space Force. All of this matters for Lockheed Martin, since despite being a global player, they mostly generate around 70% of all their sales from just the US government alone, according to Investopedia, which, when looking at total US military spending, there were actually a few years of decline under Obama and Biden, but every year since then has been an increase under Trump. So if the trend continues, one might expect to greatly benefit Lockheed, which, by the way, has been performing very well over the years, doing almost 60 billion in sales last year alone. And yet the stock has been struggling lately, as they're actually down this year and sit in the lower part of their 52-week range. Lockheed tends to be a cyclical stock, so buying on these dips usually works well long term. And with the tailwind of a Trump presidency, along with one of the nicest growth-oriented dividends in the market at a 3% yield with double-digit growth and almost 2 decades of consecutively growing, growing it, I think Lockheed Martin is a top stock to keep an eye on for sure, especially as a dividend growth stock. Okay, now moving on to stock number 2. If Trump is successful in recovering the economy and keeping taxes low, then we could see more money in people's pockets, and that could drive up consumer spending. And it already looks like we're headed in the right direction. Now, we're clearly still in a recession, as the second and third quarter both saw year-over-year declines, which is the definition of a recession, 2 consecutive quarters of negative GDP growth. However, the third quarter was still a dramatic improvement over the second quarter, as quarter over quarter it grew by a record-breaking 33%, which is about double the next largest climb in history. Add to that the idea that more stimulus will eventually be coming at some point, and the fact that Trump is clearly more opposed to pepperoni lockdowns than Joe Biden is, and we could potentially be talking about a booming consumer economy once again, at least over the next 4 years. Obviously, there's a ton of different ways to play that, and I think a lot of people would probably go with something like Amazon, who continues to be red hot in virtually all aspects of their business. And I love Amazon myself, but we do talk about Amazon quite a lot on this channel, so I'm actually going to go with something a little bit different today, just to give you some variety. And instead, we're going to go with one of my other favorite core foundational stocks, and that is Visa, ticker symbol V, who I think continues to look attractive from a long-term perspective. It's currently been going through one of their very rare dips, down about 17% from their highs, and I think there's very little reason to think that it won't climb right back up there over time. They currently command by far the most physical card market share at nearly half of the entire market, and are constantly used for online shopping or transfer purposes as well, which, by the way, that demand should really only increase during the global health crisis as more people opt to stay home, or in some cases are even forced to. But also under Trump's low tax economy, Visa was able to dramatically grow their profits, with net income surging by over 50% in 2018 alone. And while they are struggling a bit right now, with sales dipping this past fiscal year that ended in September due to obviously the gigantic recession that we're still kind of clawing our way out of, they're already expected to recover this following year and then see double-digit growth once again in the year after as well. Visa also pays a very tiny but also very high growth dividend that is not the reason why I own the stock myself, but it's still a nice little bonus that I'm happy to collect. Visa, it's one of those stocks, I just really like them long term. It's a good foundational stock in my opinion. Okay, now finally, for our last stock on the list, we might as well talk a little bit about Project Warp Speed, which is one of the most important initiatives that the Trump administration has pushed this year, that aims to help speed up the development and release of a widely available V-shot for the pepperoni. Time will tell how effective these moves will be, but currently there are a few different companies that stand to benefit from the need of a safe and effective V-shot, and my personal favorite of the bunch is a company that is so large and well diversified that they don't even really need the shot to be a successful long-term investment, but success in that area would only help them even more, and that's Johnson & Johnson, ticker symbol J&J. Now, the stock has been super volatile over the past 5 years and is still down year to date, while currently sitting around the midpoint of their 52-week range, but this weakness could be setting up for a solid long-term gain. Most recently, J&J stock has been falling because of a lot of negative press from their late-stage pepperoni shot trials being put on hold due to a volunteer suffering a major medical illness that has still not been fully explained, at least to my knowledge. But according to J&J, after doing independent reviews, they determined that the illness was not related to the V-shot, and they therefore decided to resume the trials. But the stock continues to lag behind anyway, as J&J is not even really the front runner in the race right now for a V-shot. According to Biopharma Dive, that honor will likely go to either Moderna, Pfizer, or AstraZeneca, while Johnson & Johnson will probably be a little bit behind them, releasing their shot for emergency use closer to the start of next year. So they're a little bit behind some of the competition there. Still, J&J's approach is actually a little bit different, and I think I might even like it more. For example, Johnson is attempting to develop a single dose shot, while most other competitors are working with 2 or more. That may not sound like a big deal, but a single dose shot would likely convince a lot more people to get it rather than having to worry about doing it multiple times. J&J is also doing larger trials than most of its competitors, with one including as many as 60,000 people, about double what most others are doing, and it will be ongoing for as much as 2 years. So if the pepperoni turns out to kind of stick around with us for a much longer time than we anticipate, J&J may have much more safety data on their shot than some of their competitors, and that could lead to it being a more trusted option, even internationally, which in turn could drive up huge demand for the shot. And what I like about J&J is that they can easily handle this demand because of their massive size and scale, as they are currently ranked the #1 largest pharmaceutical company in the world according to Fierce Pharma based on revenue, which thanks to so many household brand name products as well as medical device sales across a very well diversified business model, those sales are consistently in the tens of billions of dollars, right along with consistently high profits as well that allow them to pay a nearly 3% dividend yield that has still managed to grow for almost 60 years in a row. That's pretty incredible. Still, because of bad press that came even before the V-Shot was in development, the stock has been suppressed down and currently trades around 20 to 30% cheaper than the sector based on PE ratio metrics. A long-term turnaround for J&J does seem likely though, and with Trump wanting multiple V-Shots from multiple companies, J&J's long-term approach on that could prove to be a winner. Not that they even need it, but just add everything up that J&J does, and I think it's a stock that may be worth keeping an eye on as well. Anyway, those are some companies that I think can benefit from a Trump administration over the long term. Not saying that you should run out and buy these stocks right now, but I do think that they are stocks you should keep an eye on, and they are ones that I think can benefit from Trump policies. So anyway, let me know if you agree with any of these stocks or if there are others that you would replace and put on the list instead. I'd love to hear your thoughts down below. Again, I believe I'm uploading this video on election day, which is kind of crazy. So hopefully everything is doing okay out there. And in all seriousness, I hope you're all staying safe, and I hope things go easy here, and we don't have any kind of chaos or anything. But I hope you're all doing well. I hope you're all staying safe. And thank you for watching the video. Thank you for the support. I'll catch you in the next one. Take care. Bye-bye.